Welcome back to the channel. Today we are tackling the biggest debate in the financial world right now. Is the artificial intelligence rally finally turning into a dangerous bubble? Or are we simply witnessing the birth of the most profitable era in corporate history? If you value rational, fact-based investing, you're in the right place. Let's dive into the numbers. Is the stock market in a bubble? If you look at the S&P 500, trading at 22 times forward earnings, well above its historical average, the answer seems obvious. But look closer. We are witnessing a market where the top 5 companies are generating more cash than most countries. This isn't the dot-com era of 2000, where companies had eyeballs but no profits. This is a battle of the giants. However, a new threat is emerging on the horizon. With the anticipated IPOs of OpenAI, Anthropic, and the massive SpaceX AI merger planned for late 2026, we are entering a phase where, quote, hype might finally overtake, quote, value. Today, we analyze why the market isn't in a bubble yet, but why these upcoming listings might be the pin that finally pops it. First, let's address the elephant in the room, market concentration. Yes, the S&P 500 is the most concentrated it's been in history. But unlike the year 2000, today's leaders, Microsoft, Alphabet, and Nvidia, are high-margin machines. According to recent 2026 projections, Big Tech is expected to spend over $650 billion in CapEx this year alone. Investors are nervous about this spending, but here's the context. Alphabet's cloud revenue is growing at nearly 50%, and Nvidia's demand still exceeds supply. These aren't speculative bets, they are infrastructure builds for the next century of computing. When you buy the index today, you aren't buying hope, you are buying the most profitable balance sheets ever assembled. The premium over historical PE ratios is, in many ways, a quote quality premium. However, not every AI-adjacent stock is created equal. This is where the bubble talk gets real. Look at companies like Tesla and Palantir. While Palantir has shown incredible growth, recently beating estimates with a 70% year-over-year revenue increase, it trades at multiples that assume perfection for the next decade. Tesla, on the other hand, faces a Musk premium dilution. With the emergence of SpaceX AI as a public entity, Tesla may lose its status as the only way for retail investors to bet on Elon Musk's ecosystem. These stocks are priced for a future that hasn't arrived yet, often ignoring the reality of current cash flows. If a correction starts, it won't start with Microsoft. It will start with the names where the PE ratio is triple digits and the growth is starting to decelerate. Now, let's talk about the real danger to the market, the 2026 IPO wave. For years, the most valuable AI companies have stayed private. But that's changing. OpenAI is reportedly eyeing a $1 trillion IPO for late 2026. Anthropic is close behind with a projected $350 billion valuation. And then there's the big one, SpaceX's acquisition of xAI, creating a combined entity valued at over $1.25 trillion. When these companies hit the public market, they will demand massive amounts of liquidity. If OpenAI goes public at a $1 trillion valuation, while still losing billions, it will test the market's limits. Historically, a surge in mega IPOs often marks the top of a cycle. Why? Because early venture capital investors need an exit, and they usually find it when retail enthusiasm is at its peak. If these listings trade at astronomical PEs without a path to profit, the AI bubble will no longer be a debate. It will be a reality. So, is it time to panic? Not necessarily. A bubble isn't just high prices, it's a lack of fundamental support. As long as the, quote, magnificent 7 feet continue to grow earnings by double digits, the floor remains solid. But the entry of OpenAI and SpaceX into the public sphere in 2026 will change the game. It will suck liquidity out of other sectors and increase the overall risk profile of your portfolio. My advice? Distinguish between the infrastructure of AI, the companies building the chips in the cloud, and the speculation of AI, the companies trading on future promises. The former is a fundamental shift. The latter is where bubbles are born. Keep your eyes on the S1 filings this year. They will tell us everything we need to know about the next 5 years of investing. If you found this analysis useful, please hit the like button and subscribe to the channel. It really helps the algorithm recommend this content to other retail investors looking for clarity. What do you think? Is OpenAI worth $1 trillion, or are we repeating the mistakes of the past? Leave a comment below. I read all of them and I'd love to hear your perspective. Thank you for watching, and I'll see you in the next video.